How can non-US and non-Australian tax residents take advantage of US LLCs? I want to ask this question because I know it's your bread and your butter in what you do. And so we want to kind of drill down on this one. And so we discussed how some of my clients have moved abroad and have utilized US LLCs like that. But can you tell us what the risks are and what the advantages are, and whether or not, if they were selling to the US or if they're operating from a US LLC, there's certain VAT requirements or anything like that?
This is the how can I use an LLC and pay no taxes? Like, how does that really work, right? If I open a company in Delaware or in Wyoming, you can't see who the initial members are. You can see who organized the company. You can see the name of a person. I have someone on my team who's doing the stupid state filings and organizing the companies, but you cannot see who the owners are on the state website. That means that if someone's coming after you legally, they wouldn't even know you own that.
Today, we have James Baker, CPA from the US, to answer some of our Australian US tax questions. James, thank you so much for your time. Really appreciate it. How are you doing today?
Thanks, Mark. I'm so happy to be here. And again, we just talked about this. I'm back in the past, so I'm yesterday right now. So I'm happy to be here yesterday.
I love it. I love it. And we're in the future here. I'm telling you now, it's all good here in the future. Everything's great. So keep enjoying it.
Great. So happy to be here and answer any questions that you got.
Thank you. Yeah, really appreciate your time, James. A few kind of questions that we've got for some of our Australian clients who are looking to do business in the States as well, but also utilize US structures and understand the best way to do that. So we'll get straight into the questions. One of the ones which I was really interested to understand was kind of, when does tax or, say, a permanent establishment get ticked over when selling in the States? So, for example, if a client of mine, let's just say an Australian tax resident, he's doing a drop shipping business, selling supplements and selling kind of vitamins to the US, when does he start having an economic presence in the US to start paying tax in there? If he's got no employees and he's using a third-party distributor, do they get caught up in those situations?
That's a great question. So there's different levels. So the first level is checking for tax treaty, and the tax treaty is very explicit as to what is permanent establishment. They go through examples, specific days, and all of that. So I don't have the Australian US tax treaty in front of me, but in general, it's if you have people performing services over in the country. Many treaties, like for whatever reason, I was reading Poland the other day, you can send people over for 40 days and have them working on something and it still not be a permanent establishment. So the treaties are generally better because for permanent establishment purposes, because they're very specific, and they're also more restrictive as to, like, they make it harder to achieve permanent establishment. So the treaties are generally more helpful. In a general sense, if the treaty didn't apply, it's about having a U.S. trade or business. They talk about the physical connection, and that's like having an office and having employees. And then they have the management in the U.S., and you have a dependent versus independent contractors. If you have people who are only work for you and they're doing services in the U.S., then that would be another little strike, I guess. And then if you have your own warehouse that's private and your own inventory, there's a lot of things we can always do to avoid hitting permanent establishment with different planning. For example, you have a separate company that you own that manages the inventory, and that might pay taxes, but your main global entity that does the sales doesn't. So there's ways to, with proper planning, there's ways to really confirm you don't have it, and also to avoid it if you do have it in one section of your business.
Yeah. Okay. Yeah. Thanks for that insights. It's really helpful to know that there is potential planning opportunities as well. Just the way you act, because the worst case scenario is you don't want to get caught up in doing something wrong and something kind of illegal, just based on not knowing. But if there's opportunities to plan, then that's huge.
Yeah, there's planning comes down to having a vision for what you want to do, understanding the tax laws, and then understanding the business operations. Because sometimes it's just as simple as segmenting your business into two different parts, where you have the fulfillment and then the manufacturing or whatever you're doing. It might be a simple change, but it can make a huge difference, both making the operations easier and the tax compliance more streamlined. Because when there's more tax confusion, there's more tax risk. As long as, because then you have the risk of being taxed in both places, because there's confusion. But if it's very clear, then you can really manage your risk, which is a huge part of tax planning.
So just to go further on now, and let's say we got this client with selling vitamins and supplements from Australia to the US, and let's say we want to open up a US LLC to manage, and he was to go, say, move to the UAE, and we want to open up a US LLC now to manage operations because it's a lot easier to do that. Do you see any inherent risks in that scenario when he's selling to the States, or would you recommend to have separate companies for fulfillment, as you mentioned, and for kind of selling as well?
From what we've seen, both from the IRS actions and the actions of businesses like Amazon that are kind of like gateways for these kind of companies, there's no tax being assessed on someone who manages a business remotely and only ships product in, especially if they're using a third-party fulfillment, and this third-party fulfillment they don't own and they're doing it for many clients. Like Amazon is the biggest third-party fulfillment engine out there. Like they manage probably the most in the world, and they're not withholding taxes on clients. If this was subject to tax, the IRS would make Amazon withhold taxes on payments to non-residents for these kind of services, and they're not. One little thing I do want to mention is that some states, like California, for example, are getting more aggressive in trying to assess taxes on some of the very large businesses based on having a presence in California, which gets complicated because most of the state forms kind of follow the federal forms. And if there's no federal filing requirement or tax to be assessed, it's kind of a mess to figure out what to do with the states. That's something that's kind of pending and to keep your eye open for.
Awesome. Thank you. Thanks, James. Now on state taxes, I would like to know more about kind of state taxes. One of the ones which I understand is certain states have privacy laws that stop them from, or stop your membership interest from being kind of shown to court. Can you tell us more about that one, and whether or not having a bank account kind of affects that privacy, because you can't really be private?
Okay, so in terms of privacy, it's here's some examples. In Florida, if you register an LLC, you can look at who the officers or the members are of the LLC. It depends how you file it, but that's public on the website. If I open a company in Delaware or in Wyoming, you can't see who the initial members are. You can see who organized the company. You can see the name of a person. I have someone on my team who's doing the stupid state filings and organizing the companies, but you cannot see who the owners are on the state website. That means that if someone's coming after you legally, they wouldn't even know you own that, unless otherwise going. So let's go to the next level, the banks. Now, the banks are private institutions, and they have their own privacy laws, and they're not going to give information unless specifically subpoenaed by the courts. So if a court subpoenas a bank for the information of a company, then the bank would be required to issue that information. But you can see how in that conversation, in that chain of thinking, the person who's suing you would have to know about the company and the bank account before they could even get to that point, right? Now, the last level is the new reports. There's these new BOI reports, which are required this year. So if you are doing criminal activity, every LLC is required to share their information, the beneficial owner information. So that's generally 25% or more owners of any U.S. company have to file with FinCEN, which is the Financial Crimes Enforcement Network. So they're really after money laundering and terrorist financing. I don't know if you want to say the T word on YouTube, but but as long as you're not doing that stuff, you're fine. And that information is closely guarded. But those are the only people who would know, the only organization that would know who owns an LLC. But the only instance they're sharing information is when it's formally requested on a case-by-case basis from institutions like banks or foreign governments. So that's also pretty guarded unless specifically requested, and it's only about criminal stuff. So that's a really long answer for a short question.
No, it's a really interesting question because it's something that we don't have in Australia. And so one of the aspects I was speaking to someone recently, they were involved in doing a project, and they wanted to hide their information, but you can't really hide information in Australia because any sort of company, you can go onto our corporate register website and then pay $20, and then you can download a company extract that has the person's addresses and the person's full name and details. And so it cannot be ideal depending on what the person is doing. And so that's why it's really powerful that the US has the ability to protect the shareholders of corporations.
Yeah, and that's it's really great. That might be there's an example that we were just talking about for maybe when an Australian person wants to operate out of a U.S. company. If they're extremely privacy focused, then no one would ever know who's operating from it. So if you're super privacy focused, maybe a U.S. company is better because it passes through to Australia anyways. I think jumping ahead, but yeah.
No, I was thinking about that as well just now as to protect them. Then I'm also thinking, well, ultimately the membership interest needs to be held in Australia if they were being an Australian tax resident, and so it could be in your personal name. You could still hide your corporation, but then it might not be advantageous from a tax perspective.
You're right.
Yeah, you're going to find that one. Maybe in a trust.
You can track it back. You can say, oh, this company. Well, it'd be tricky because you wouldn't see who owns the LLC ever, even if it's owned by a trust in Australia. And the trust doesn't have to disclose what it owns. It just has to disclose who owns it or whatever, right?
Yeah, could be an opportunity. And so why is there so many different why all the states have such different kind of tax regimes and different kind of things like that?
Well, that's a great throwback question. The United States of America, the idea was that the one government wasn't too powerful. The states have their own governments. The states have governors, which are like presidents of the state. And then they have their own like little governments. And then the federal government kind of governs like global commerce, interstate roads, but the states actually have a lot of individual power. So most of the states get most of their revenue from how I understand it, from sales taxes over income taxes. The U.S. government, the federal government, the federal government doesn't have like a sales tax. We have import taxes, whatever, but there's like not really a federal sales tax. Those are all state level taxes. So I think generally that's a big thing. States have property taxes. There's no federal property taxes. All the federal taxes are generally one income tax and then like like federal import export taxes.
Tariffs and things like that.
Yeah. And tariffs. I mean, there's not really like federal property taxes or federal, it's all state taxes. So that's just how the U.S. is set up. And there's 50 different states with 50 different governments and sets of rules passing their own laws for a couple hundred years. And that's just how it is.
It's fascinating because I've spoken to many people who've moved to the States and they love the fact that it's a more decentralized like that one. And especially during the pandemic, a lot of people found that there was a lot more freedom because different counties had different laws. And so I spoke to a few people who actually left Australia and moved to the States so that could be a bit more free. And it's good because I really like that because it also gives it's like kind of you're competing. And so the states are competing against each other to acquire high net worth individuals. And so I've seen from just like observing that a lot of people have kind of left California and New York and have moved to Texas and Florida because of these advantages.
Yeah, I moved from Florida last year and I live in Texas now. I love these states. There's no personal income tax. And I used to live in New Jersey and work in New York. So I'm I guess one of those people. I mean, I did move 7 years ago from New York to Florida, but yeah, man, the weather's better. Then there's a lot less taxes. And when COVID was around in Miami, you couldn't really tell. Like people, like for a couple of weeks it was bad, but everyone else just got COVID 3 times, and just just like we're living. And you could see like there's a lot of people who you were pretty locked up in Australia, right? Everyone like you guys couldn't leave your apartments and stuff, right?
Well, let's not get started. But yeah, we had a curfew at one stage in my city, Melbourne, where we couldn't even leave our house after like 8 p.m. or 9 p.m. It was ridiculous.
Well, so that's why that's cool about the States. I mean, we have the taxes aren't too different. The state taxes aren't super high. Even if you're in California, you make a lot of money, it's 10% extra. It's a lot if you make a lot of money, but for most people, it's not like gonna crush you. But yeah, the Florida and Texas and a couple other states, Alaska, it's like Wyoming, don't really have an income tax. They just have like property taxes, and people really like that.
I got a couple more, but I just want to touch base on the states again, because I also understand that some states, specifically North Dakota, have their own banking regime and their own kind of state central bank. Do you know much about that one and how that one works?
I know about Puerto Rico, which is another quasi state that is like a possession. And there's there's new Puerto Rican banks that operate as U.S. banks, but not banking in Puerto Rico. I don't know anything about North Dakota's unique banking thing, but there's different levels of insurance and different levels of types of like protection you can have as a financial institution. You need different kinds of licenses. So you need state licenses wherever you're operating, and then the federal license is just is more like to keep people from just opening a bank and just taking everyone's money. So there's some basic stuff, but it's pretty open. I mean, U.S. is very pro-capitalism, pro-create a business, and that's why it's done so well. So no, I don't know anything about the banks there. Sorry.
No, that's awesome. No, that's great. No, I agree as well. We really appreciate the kind of the go-get attitude of the states in Australia. Whereas like in Australia, we've got it's not as pro-capitalist, which may be unfortunate because it doesn't encourage people to go out and create as much. Because we know that capitalism kind of creates a lot of jobs and kind of provides a lot to the economy.
Yeah, I mean, capitalism does, and it creates more. Entrepreneurs can make more money for their families and save more in taxes. And it's just a mindset. Maybe then that's what you're seeing in the U.S. People are going from being an accountant for a company to being a sole practitioner who has 5 accounting clients and makes double the money and works less. Like it's just a mindset. It's changing from I want to do my own thing and do this. You can do the same work, but be a consultant for more companies and do it more efficiently and, make more money for your family. Because there's a lot, you know how it always is. The 1% is only getting smaller and getting tighter and getting richer over the last 10 years. And, while most working people are struggling even more.
Yeah, no, 100%. And I want to ask this question because I know it's your bread and your butter in what you do. And so we want to kind of drill down on this one. And again, it's really important for both our clients to know this one. So how can non-US and non-Australian tax residents take advantage of US LLCs? And so we discussed how some of my clients have moved abroad and have utilized US LLCs like that. But can you tell us what the risks are and what the advantages are, and whether or not if they were selling to the US or if they're operating from a US LLC, there's certain VAT requirements or anything like that?
Okay, I'll go through this question. We buried the lead. This is the question, right? This is the how can I use an LLC and pay no taxes? Like, how does that really work,
That's
right?
It.
And so I'm going to try and give you a good answer that's not too long and boring. The basis is an LLC is a disregarded entity. So if I, James Baker, have an LLC and I make $1 million, the LLC is not paying tax. I, James Baker, am paying tax. If you, Mark, are using an LLC and you make $1 million, it's still the same. You are paying taxes. However, you don't live or work in the U.S. So if you didn't have the LLC, you would never pay taxes in the U.S. The LLC, essentially having an LLC and a U.S. bank account, as we've seen in old court cases, but we've seen in the courts, doesn't mean you have a U.S. business. So that's like the gist of it, right? If you don't have a U.S. business, then you don't have to pay taxes in the U.S. And it would be, if you think about it in that perspective, it's kind of insane to think that you should pay taxes in the U.S. because you just, Mark, working in Australia. Like, why would you pay taxes in the U.S.? Especially, and it doesn't matter if you have U.S. clients or not. And there's case laws and case precedents. Most of them are old, but there's a couple that are good. I can go into some if you want me to, but most of it comes down to, okay.
Yeah, well, we love cases because there's precedents, and that's important.
It is precedent, and that's what we use. Most of this comes down to, though, if you pay tax in the U.S. if you're performing services physically in the U.S. All the laws were written before the internet. Most of the major changes haven't addressed any of the core tenets of tax law. So if you're flying to the U.S. and you're doing accounting audits on site, then yeah, that's subject to tax in the U.S. But that's not really happening for most people. And if you're doing that, then we can structure it in a way where only those activities are subject to tax if you stay really organized. So the case law, the one that I like, there's a book that I really love that I've read a bunch of times about international tax. When we go on road trips, I put it on early in the morning so the kids sleep an extra couple hours, so I can get through the whole book. If I leave at 5, I get through the whole book by 11. Everyone sleeps the whole time. It's called the case of Pietras Negras versus the U.S. government, right? So it was a Mexican radio station broadcasting out of Mexico. It was in the 50s. But they had a U.S. bank account. They had a meeting room in a Texas hotel. They got all their mail to this hotel in Texas, and it was like their business office. They regularly held meetings there, and all of their clients were in the U.S. because it's a radio station. All their ad revenue was from the U.S. Basically the IRS said, you owe us taxes. They took them to court, and Pietras Negras won. And the U.S. government ruled that they didn't have sufficient activities that constituted a trade or business, and they met in the U.S. to go over stuff. They got all their mail in the U.S. and they banked in the U.S. and all their clients were from the U.S. and they still won. So there's different cases like that. Radio was the closest example to internet before the internet, because it's essentially the same. You're broadcasting from where you are. So that's a case I referenced. There's a couple other ones where, like the cases, you'll take like a component of the law from the case that's kind of solidified, but there's no one-on-one examples of like this e-com seller was attacked by the IRS and won. You know, we don't have any of those yet that I've seen. If you have one, send it to me. But that's conceptually how it works. If you are not in the U.S. and you're using an LLC, it doesn't mean you have to pay tax in the U.S. And it's a great tool because the LLC gives you a lot of legal protection. It gives you access to U.S. banking and U.S. payment processors, and easier to get paid by U.S. clients. And we help our clients do that and manage these and set these up and do all the compliance you have to do with it. And it's been a great tool for a lot of people.
That's great. That's great. Any inherent risks that run with it? If US LLC, if you don't have a presence in the US, is there anything other than like filing and getting all the forms done on time? Because I think we spoke last time. You mentioned there was like a $25,000 fee or penalty or some high penalties. What are the risks for our clients when they're accessing these US LLCs as non-residents?
So the risks are, if you don't do it right, you have some risks. It's more like potentially if you don't operate your LLC the correct way, you could potentially have legal exposure if someone were to sue you. I think it's the same with companies all over the world. If you don't operate them the right way, you commingle your funds and all that stuff. But from a tax compliance risk, I mean, yes, if you do the forms wrong or you don't do the forms, there's penalties, there's taxes. It's not like if you don't do them, you're subject to tax, but there are different penalties and fees. And because no matter what, if you have a single member LLC or a multi-member LLC, there's some kind of compliance you have to do with the IRS. You have to renew your company with the state every year. And there's this beneficial ownership interest report, which is the Corporate Transparency Act, which is new for this year. But, you only have to really file it once. It's not really a tax form. But those are the kind of the three things you have to do, and you can keep your company open. Another thing is like having the right forms for the banks and making sure your income isn't withheld. There's a lot of little nuances and tricky stuff, but most of the clients I'm working with, there's banking issues because sometimes you have to travel to the US if you don't do the applications right, and just making sure that they have all the forms done correctly and on time. And now it's filing season right now.
Perfect. And that's where you guys are able to assist our clients. And that's awesome. How about any VAT if you were selling in the States? And I only ask because from an Australian perspective, if you're a non-resident company selling to Australia and you hit a certain threshold, which is $75,000 of Australian sales, then you are obliged to register for our version of VAT, which is GST, and pay GST on those sales. Is that something that the US has to do?
Yeah, so that's a great question. So we touched on it a little bit before. The IRS has like the import-export taxes, like customs or whatever.
Yeah.
Like that's kind of like you figure that out and it's only on products. And now after that, you have to deal with 50 different states, have 50 different sets of rules as it relates to sales taxes. So I'm going to talk in generalities, but as you're selling into a state, it's based on where you're shipping to. So if you're shipping to me, you have to deal with Texas issues. And generally, services performed remotely or online, like you say you do bookkeeping or say you do whatever you do, software engineering, it doesn't matter. Any kind of service you're doing would not be subject to sales taxes generally. If there's a service mixed with a product component, let's say like you're crafting custom things for people or you're fixing things done, like if they ship a computer to you and you fix it, you ship it back, potentially there's some sales tax risk and you have to review it with every state. There's different software tools for that, but it can get complicated. So that leads us to say, generally services, no, but products, yes. So if you're selling shoes or hats or whatever, there's 50 different sets of rules, and some things are not subject to taxes in certain states. So clothes might not be subject to taxes in North Dakota, but they may be subject to taxes in South Dakota. Or like I had one client that was selling contacts, and they're considered medical devices in like 10 of the states they were selling in. And then apart from that, once you cross the threshold is generally 200 items or $100,000 in sales is like the general threshold across the states. That said, that's if you're selling on your own website. If you're selling on Amazon, or you're selling on Walmart, or you're selling on eBay, or you're selling on one of the platforms, they take care of all the sales taxes for you, and they'll charge it and they'll send it to the states, and you don't have to do anything. So you have to see what platform you're selling on. It makes it a lot easier, because otherwise you have to register in the state, charge the sales tax, which the payment processors can do that, and then you have to file and remit the taxes to the state. So that's a long answer again. Do you have any follow-up questions to that?
No, but it's awesome, because as we've mentioned multiple times, having a US LLC as a non-US and a non-Australian resident, tax residence, is probably one of the most powerful structures out there, and is probably the most underrated structure that anyone can use in those aspects. And so just again, depends on where your membership interest lies and where you reside from a tax perspective. But it's great to learn more about that one.
I want to add one more thing to that, is that it may make sense for, let's say you have an Australian company that sells kangaroo hats. I'm so sorry, but whatever, they sell that to America. It may make sense to use an LLC, because sometimes the states aren't that modernized, and it can be really annoying to register a foreign company in a state, to do business in a state, or not to do business, but to get a sales tax number in a state. So sometimes it's easier to operate out of a subsidiary, so you can do all of the sales tax registrations and filings and work out of a U.S. company, because sometimes it's complicated. At least in my experience, it's been with the UK, to register foreign entities in U.S. states. They just don't have, they're just not set up to do that. The state governments have less funding. So that's an example where it might be useful to have a U.S. company if you're doing e-commerce.
For sure. Yeah, you want to get the compliance aspect kind of done right, and you don't want to overcomplicate things from both perspectives. And that's one of the biggest issues I find in our industry, James, is that we need to kind of satisfy the domestic laws, but also balance out the kind of optimization, and also balance out the other place where you live. So there's a lot of different kind of balancings and things that need to occur. So yeah, it's why we're here to provide this information on YouTube, and this is why we're here to assist our clients in these areas. That's why we work our asses off to learn about these things and have these chats and do things like that. So yeah, we're here to help, guys. So if you got any questions, do not hesitate to reach out to me. James, really appreciate your time. It's been awesome chatting again. Can you please let our viewers know where we can find you? And yeah, if you got anything else to say.
Yeah, thanks. Make sure you guys like and subscribe if you thought this video was valuable. Mark's channel is great. He's adding a lot of content, and he's doing a lot for this. You can find me at jamesbakercpa.com. I have a YouTube channel too. It's the same name. It's my name. I talk about U.S. stuff, and you can schedule a free call with my team to see if it works, if we can help you out with something. So, or comment below if you have other questions that we didn't answer. But you're in the right spot. Awesome,
James. Really appreciate your time. Thank you so much. It's been a pleasure. No doubt we'll be in touch. We'll link all your details below. And yeah, if you got any questions, guys, comment below, and we'll go from there.
Thanks, Mark. Appreciate you, man. Bye, everyone.
Thank you.